I just want you, if you can, to take us behind the scenes. When you see your stock falling 5, 6, 7%, and you're sitting there looking at the Bloomberg terminal, Bloomberg.com, wherever you look, I hope you go there, and you say to your team, right, why are the stocks falling? What's happening to our name? Rick, how did you respond just yesterday with the management team?
Well, I did look on my Bloomberg terminal. I've been a user for a long time, and so trying to understand what was happening. You know, for us, AI is a real accelerant. So it was puzzling to see our stock sell off related to AI because we're benefiting from it in multiple ways and bringing it to our clients to help them in their financial lives. And we think we're best positioned in the financial services industry to help clients with AI because of our size, our scale, the depth of our relationships, and all the data we have, which is a key ingredient to winning in AI. And I'll share an example. You know, last week, we brought the best of people and technology to our clients. We had a family come in that had a complex trust. They wanted to have a discussion with their children about what that trust meant, how it was going to help them in the future. But it was a 400-page document and hard for the kids to understand. And using wealth.com, which is a tool that we have available for our clients, they were able to create a 2-page visual summary of their trust and estate document that led to a conversation with their advisors and their trust experts that brought a lot of light to what was in that plan and put the whole family on the same page. And that power of people and technology, I think, is what will win in the wealth space. And we think we're the winner on both fronts, which is why we were disappointed and surprised to see our stock sell off yesterday.
So, Rick, let's talk about the people selling and ultimately why they sold. Because in their minds, you've got this company, this small startup that's going to automate personalized tax strategies and make it much cheaper and threaten your pricing power and the pricing power of wealth managers more broadly. What are they getting wrong?
Well, I think that AI tools like tax planning, which we have available today, is something that's going to make advisors more effective, more consistent, able to serve more clients, but it's not going to make them less useful. Ultimately, what the client is looking for is convenience and expertise. And the advisors are going to continue to play a critical role in bringing together all the AI tools, all the right information to have that discussion with the client. They're going to lean into relationships. They're going to lean into judgment. Ultimately, these are complicated decisions, very emotional decisions that often involve family dynamics. And that role of the advisor as a critical sounding board to the individual and to the families, we don't think that's going away, but we think AI will make those conversations more impactful and more powerful.
So, Rick, I don't think market participants think it's going away wholesale either. I think what they think is going to lead to fee compression and a shift in market share. And ultimately, Rick, that's the difficulty that you've got now. It's the difficulty proving the negative, that won't happen. How do you go about doing that in the year ahead?
You know, this is the same story from 10 years ago when robo-advice was going to displace the advisor community and pressure fees. And if you look at what's happened, first of all, I think we're the biggest robo-advisor in the industry. We have $100 billion of assets. And we've provided that technology to our advisors who have used it to be more efficient in delivering for their clients. But you haven't seen it displace the growth of the advisor community. In fact, it's grown and fees haven't come down. And that, again, that was a new technology 10 years ago. It's been additive to the advisor community, just as I think AI will be. And so I don't see fee pressure. I actually see this accelerating the importance of the role of the advisor who's going to have to work and bring all these AI tools together and all the different insights and make them impactful for the client.
Rick, there's a larger question here, especially on payrolls Wednesday, which is, I guess, where we're at, which is in order to justify the fees and the business model, do you need to hire higher caliber people, but many fewer of them? In other words, a lot of these other smaller tasks can be done by artificial intelligence, by some of the robo-advisory programs that you already have in place. Have you already seen that come to your business model?
We're seeing AI help our clients in multiple ways. One, it's bringing new tools and capabilities, like the tax, trust, and estate capabilities that we're using wealth.com that I described earlier. It's allowing us to reach new clients. And I think that's why you won't see the population of advisors shrink, is that AI will be useful in reaching new clients that we couldn't before. I watched a client interaction in our agentic AI capability pilot that we're using with clients that we built in partnership relationship with a leading AI firm just this week. And what that tool was able to do is have a direct dialogue with the client digitally that understood what the client wanted and needed. And then after having a tactical conversation, asked the client, this agentic AI said, can I call you and have a broader discussion about your financial goals and plans? And this agentic capability was able to have a conversation about his desire to put his 2 kids through college, to be able to travel in retirement, and ultimately to leave a legacy to his family. And then that led to a conversation about a concentrated position he had, and maybe the need for him to talk to one of our experts about using a tax loss harvesting strategy to diversify that position. Those are conversations that at the scale of 46 million clients we couldn't have before. But now with the power of AI, not only are we reaching those clients that we have a relationship with, but we're able to help a whole new group of clients that we couldn't before. So AI is going to be powerful for our industry. We're going to be the natural winner because of the depth of our relationship, our client base, our technology, and the data. And we're leaning into this trend in a significant way because we do think it's going to be big.
This sounds like a lot of what Brian Moynihan of Bank of America said, which is that the entire business size would grow tremendously and the size of the employees might not change, but the ability to capture a larger share of the market does increase. How much do you find, Rick, that you have to invest in some of the technology, that you have to do different CapEx plans in order to keep up and make sure you're not left behind?
Well, we're investing a lot, but Lisa, I'll come back to the benefits. We look over the last 5 years in which when we have been investing heavily in our efficiency and leveraging AI to do so, our cost to serve an account has come down 21%. On an inflation-adjusted basis, that's 40%. Our headcount isn't any lower, but we've grown and we've used technology and AI to be more efficient, to serve clients in different ways, to answer their questions more efficiently, to do more digitally. All of that is leading to cost efficiencies for our business, but it hasn't meant lower headcount.
Rick, if you could point to one thing, what do you think is your biggest moat right now?
I think the size and scale of our firm and the fact that we keep the clients at the very forefront of everything that we do. For 51 years, we've been about client choice and innovation and technology. If a client wants to work completely with a robo-advisor or an AI advisor in the future, we're going to have those capabilities and we're going to make it available to the advisors on our platform. But I think most are going to work with a combination of people and technology because these are emotional decisions where that combination is going to be really powerful, and we're going to make that available to our advisors and to our clients. So I think our biggest moat is that we always put the client first. We innovate, we adapt, and we move forward to make them as best off in their financial life as they can be.
And Rick, just as a final question, just to speak to you as a human being, you wanted to make this appearance happen today, and we certainly welcomed it. I always enjoy catching up with you. Was there something about yesterday that just kind of pissed you off as a man, as a leader of a company, that made you want to engage a little bit more?
Well, I think there's two things. Number one, I think the market's missing that we are a natural winner in the AI space because of all the advantages we have, because of our size, our scale, our data. And so I think it's important for the market to understand that and see us as an AI company. Number two, we've seen what's happened in some of the other spaces like software, and we wanted to be able to come on and tell our story about why we're so much different and why AI is a beneficial to our business, not a hindrance, and it's going to help us flourish and grow and serve clients in new ways and ultimately lead to the growth of the company.
We saw this with software names last week, and what I didn't hear much of was insider buying. Now, Lisa and I were just talking about this, Rick, and we're wondering whether you saw the move and you stepped in.
Well, I own a lot of the stock. I love the stock. If I'm allowed to, I'd tell anyone to buy it where it is today. I think we've got tremendous upside. If you look at our earnings last year and our revenue, we hit all-time highs. In our winter business update this year, we guided to or presented a scenario that would lead to earnings of $5.70 to $5.80. 2027 looks very bright. We've got so much going for us, and AI is only going to accelerate our ability to deliver for clients and grow our firm. So I couldn't be more bullish about where we are and where the stock is.